So today we had the initial headlines in the morning in the U.S. that there was going to be some relaxation of tariffs in certain countries. But if you look deeper into that, the 16 main countries that deal with our trade deficit are not the countries that are included in that headline. And then, of course, we have the April 2nd. And then last week, the Fed even talked about the tariffs and the uncertainty there. So I think we're always a headline away from making some kind of major move from here, whether it's, okay, never mind, or it's, you know what, I'm still going to be really firm about it. And so I think you kind of have to step back a little bit here. And by the way, earnings, of course, are going to be impacted, and the guidance on so many of these companies, particularly the tech companies and even some of the retail companies, express that. So if you just step back and you have warnings from Bissett and Trump still, you have warnings from Federal Chairman Powell, and now you still have warnings in some of the tech, which may have bounced, but still does not necessarily look like growth is ready to lead anytime soon. And unless we get a real good broadening out, small caps stay firm, retail comes back, transportation gets a bit stronger, this looks more dead cat bounce-ish than actual bottom.
Yeah. I think as you very well articulated it, Michelle, it seems like you can't really convincingly buy into this trade. On the Fed's outlook, what did you make of the meeting and the dot plot and the suggested path?
Well, it does definitely, you have to admire Powell for staying very true to the do nothing, which is smart at this point because he did suggest obviously stagflation, which means we're going to see a slowdown of growth while prices remain sticky. And in that scenario, obviously, you're not going to see much in the way of the Fed lowering. However, the dot plot certainly suggests maybe 2 cuts coming, number one. And number two, it also suggests the fact that the Fed funds rate could come down to about 3.7 to 4% as this year goes on. So my takeaway from that was, yeah, everybody was focused on the reduction of QT as the main dovish theme, but really even today, we have Fed speak coming out all week, and they're talking about the fact that we're in no rush to do anything. And whether you think that's in opposition to Trump or not, there's been suggestions of that. It certainly from a monetary standpoint makes sense.
What role, Michelle, should gold play in the portfolio according to you?
Well, you know, I've been very bullish gold for a very long time, years actually. So it is nice to see that we got up over 3,000 and now we're obviously seeing a little bit of selling coming in. If we get a dip down to 2,950, and it may not even get there, I think that's quite the gift. But I'm actually also, I'm still long-term bullish, but I'm also really focused on silver prices in and of itself, and then silver, how it relates to gold, because the silver-gold ratio is going to be extremely telling in how much inflation might pick up. So if silver starts to outperform gold, that would be inflationary. If it stays here, then we're looking more at gold as that safety play, and we don't see any reason why that should change at this point.
What would you be doing with Bitcoin or cryptocurrencies, Michelle?
Yes, you know, in the beginning of the year, we came in obviously very bullish, and then it became sort of obvious that you couldn't have any more bullish headlines and it wasn't going anywhere. We actually went flat until last week. We took position in Bitcoin again, obviously tight stops in this, and if it can get through 90, we may see another run. But I don't have a great big move in mind for Bitcoin at this point. We're range bound, so I like the 90 as resistance to get through. Maybe we go back to 100. If we can't hold here back down around 80, then perhaps we'll see another dip. And again, like everything else, the trend is unclear. We're still under some major moving averages. So you have to be cautious in that thinking, not necessarily that you're buying the dip that's going to turn into a big move, but instead you're buying more of a bounce after being oversold.